Hey, just letting you know, if you want to get into Palantir right now, I'm making bank on this put.
Oh,
Uh,
I'm already there with you,
are you sweet?
but I'm short the put.
Oh man, I'm at 70, 80%. Oh man.
Yep.
Oh man, it's red.
Yep. Well, I'll be all right because with short options, I'm way out of the money. I don't actually get hurt too much by a little bit of movement. But
Right.
yeah, if you're long the put, yeah, you've got to get the move right. But a new trade on yesterday in Palantir. Palantir down $7. First day of the trade. Maybe I should have sold the call side of this just to protect myself a little bit. I'll sell an 11 Delta
Palantir.
call. Yeah. I'll go ahead and sell the other side just in case it keeps falling today. Of course, they're going to try to screw me on the call. No, I got filled. I got filled at 163 on the 220 call. So, and if Palantir, quits falling, it's had, 5 red days. That's kind of why I sold the put yesterday. I didn't get in the strangle because I was thinking, well, it's been trending lower. I'll just sell the put. But then it big drop today. But yeah.
Okay, here next question.
Mm-hmm.
How do you determine which strike to enter into a short position on a call or a long position on a call or a put? When okay, so you we're expecting Palantir to fall. What would be the difference between a 155 or a 152 and a half? Um, why would you choose the 155 over the 152 and a half? Is there a difference in the profit there? I don't understand why people choose
Sure.
certain.
Yeah. The further out of the money you go, the less you're going to pay for the option. The
Okay.
less likely you're going to win. But if you win, you're going to win more
Yeah.
because of the size of the move and the fact that you really didn't pay much for the options.
Right.
So yeah,
Okay.
it depends. So if you're really trying to take a long shot or you're trying to take a cheap play, yeah, you go out of the money. You're way out of the money on those. Right. So here's the thing.
Yeah.
None of those, if they get to expiration, none of those puts are going to finish in the money right now. You're still at least $10 out of the money on that group that you've got highlighted and $15 out of the money on the other group. That's what I'm
Yeah.
saying. You don't want to hold these
Yeah.
because
No,
they're
they need to
going
come
to
off.
they'll eventually go to zero. So,
Yeah.
and then you lose what you paid for them, right? You're up
Well, you don't.
$500.
Right. Right.
Yeah. I would
And
take
like,
half off right now.
okay, so all right, walk me through. Okay, so
Yeah,
do
just close that, and then you're fine on the others. Let the others ride for free if
close
that's
this
what you
one.
want. Mm-hmm.
Okay.
Just to make sure you can't lose. Now you
Yeah.
can't lose, no
Right.
matter what
Because
happens on the others. Yeah.
you never know when somebody's going to a whale's going to step in and buy it and
All right.
determine like, well, 164 is a good price range. Let's get in
Well,
and
here's the
then
thing: you have to realize you have probability of profit on your positions tab. What's the probability of profit on those long puts? Go back to the positions tab. Well, you
oh,
can do it from there too, but go over to pop.
3%.
You have a 3% chance of making 1 penny at expiration.
I think I'm
So,
going to just
so
I
that's
think I'm
the
just
thing.
going
Yeah.
to call. It's been a good day. Let's not get too
Well,
greedy.
heck,
Look at that.
you made,
$918.
yeah. There is. I mean, you don't you don't hit things like that very often. It's a very very low probability play.
Yeah.
And when you do play them and you get that quick move like that on those long options, you have to take the win because if you stick it out, it's going to reverse on you at some point.
Yeah. Okay. So, all right, my next question, DT, is this. uh Obviously, and I figured this out real quick. It is a slow grind when you have a small account trying to build it up. Like
Yeah.
you're so limited on what you can trade and what you can't trade. Say like a $5,000 account, what you can realistically expect to make on average a month with that trading in like a 10, 15, 25,000 plus account? Because you see these people on YouTube all the time. They're like, you can make $10,000 a month willing the spy. Well, we know that's not the case.
Yeah, yeah. Well, the thing is, yeah, anybody can make $10,000 a month wheeling the spy if you're trading with, I don't know, a $500,000 account and have five hundred thousand
Yeah,
dollars worth of stock and spy. Yeah, a 10
right,
grand a
right.
month is nothing if you're dealing with that. Like if you're
Exactly.
selling calls against that kind of position. But but yeah, it just depends. It's very hard. Like, I had the question the other day. Somebody in the chat was asking, does trading options outperform buy and hold? And I was like, well, I can't really. There's no answer to that question. Some people will outperform buy and hold. Some people won't. It depends what you're doing with the options, because you're asking about, when you're talking about buy and hold, you're typically asking about, hey, I'm going to take the share position and SPY and just sit on it for however long. Well, with options, well, what are you doing with the options? Are you just selling puts and SPY? Are you selling a lot of things? Are you doing speculative trading? Are you trading stocks, futures, crypto? What are you doing? And then what kind of strategies? Are you just doing the one strategy, just being bullish all the time? You taking some bearish trades? You taking some neutral trades? Uh, how much risk are you taking? Are you selling 20 delta options, 10 delta options? Like, are you doing zero DTE trades? Are you doing leaps? Right? There's so many variables. It's an impossible question to ask or to
Yeah.
answer. Like, I have no
Okay.
idea how much. I will say though, regardless of what you're doing, a smaller account is very tough to deal with, because
Yeah.
you're very limited on the products you can trade and the strategies you can use. Because
Yep.
you can't trade products that are really big. You can't trade products um, that you can't do naked options on products that are too big for you. And
Yeah.
some products are so big and the spreads are so wide as far as the options chain. Maybe they only have $10 wide strikes or $20 wide strikes. You can't even go do your iron condors on that if you're only trading with a few $1,000s, because even the
Yeah.
defined risk trades are too big for you at that point. So with
Yeah.
smaller accounts, you face a lot of challenges, plus the pattern day trader rule. And you mentioned you can't really grow an account. And
No.
yeah, because
Uh,
you're just dealing with too little money. What you have to do with a small account is, I'm pretty safe with my trading. I try not to take too much risk. I'll put on some risky trades every now and then, but I'm not doing anything crazy. But if I was trading with just a few $1,000s, I would have to take a considerable amount of risk on every trade just to make it worth it. Right.
yeah.
I can't just settle for the average of 10% a year of SPY returns every year. And that's what the market tends to return on average annually, about 10% a year. Well, that's nothing. If I've got a $10,000 account, what's 10% a year going to do for me? Okay, well, at the end of the first year, I took my 10,000 to 11,000. Whoop-de-doo, right? And then the next year,
Hmm.
what did I take it up to? 12 and change, right?
Right.
Like, and I'm 2 years in at that point. I've taken 10,000 to 12,000. Like, you're not going to get very far, right? So the thing is, you have to grow your account. Well, first of all, you have to deposit money into your account. Do regular contributions to your account so it grows faster. And then also, yeah, with that smaller account, if you have to start with a smaller account naturally, you're going to take some bigger risks. Like I wouldn't want to risk more than, say, 2 to 3% of my account on a undefined risk trade for my account. But if I was dealing with a really small amount of money, I might have to risk 5 or even 10% of my net lick account value on one trade, just because of the nature of it. It'd be too limiting otherwise to trade.
Yeah. I mean, I couldn't really. Uh, I mean,
Yeah.
the stocks that you're limited to trading, like Sound and
Yeah, you don't want to
junk
trade.
junk. You don't want to. And one thing I've learned this last year of being under you and following you and everything is like stocks like that. They're great if you can catch the swing up or down. But
Yep.
like as far as whenever the hype dies off, they're lame duck in the water. I mean,
Yep.
they go back down to $10, and if you've got a cash secure put at 14, you're stuck with it.
Well,
You know.
yeah.
Oh, OSCR. Have you heard of Oscar? Well, that's what I call it.
I
OSCR.
have. Yeah. I've never traded it.
Okay. Uh, well,
Oscar Health.
yes,
Yeah.
one guy on Twitter says that its potential could go to $60. One guy on Twitter, I love I love seeing the battle of the technical analysis guys that
Yeah.
scribble all over the screen and they got their lines going everywhere. And one guy says this stock is gonna go to 300, mark my words. And the other guy says this stock is trash.
If the stock
It's
was
like,
going if the stock was going to go to $60, then people would step in and buy it up to $60 right now. Like if it was really worth $60, like a Warren Buffett type would step in and it's like, damn, this thing's a $60 stock only trading at $16. Let me buy a bunch of it. But obviously,
yeah,
things are worth what people are willing to pay for them. Right now, people are only willing to pay $16 a share for this thing. Yeah, the people on YouTube, also the ones that are telling you those crazy price targets,
yeah.
they have a position in this
Oh
company.
yeah, yeah.
They're pumping
And the
it,
more
right?
people, yeah,
They're
yeah,
pumping.
yeah.
Yeah. He really needs this thing to go up because he's underwater. He bought this thing when it was,
Probably up there.
$24 a share or whatever back here a few months ago, and now it's only $16 a share. He's hoping he can pump this thing really hard and maybe he'll eventually get out, break even. That's what I go
Yeah,
with.
I'm trying to mirror how you do some things. Just for the fact that I mean, you've been in the game. You don't get to stay in the game as long as you are if you're not doing something right. So,
Yeah, the
uh,
people that typically have really bad habits, yeah, they don't last more than a year or two trading. Well, many of them don't last more than a few weeks. Right?
yeah, and that's not
That's the Wall Street
what
bets crowd, right?
yeah, that's not what this is about. You know,
Yeah,
this is kind of like my wife says, this isn't your job, this is your hobby, so enjoy it, and have fun with it.
well,
If you make a few bucks, that's great. If you lose a few, that's good. But I just told her what I made on Palantir and she was like, "Take it out. Don't." I was like,
yeah.
"All right, I'll take it out."
Well, the trick is the longer that you're able to stay in the game, the more you learn, the more
Mhm.
disciplined you become. You learn from past experience. Like I know trades that have burned me in the past. I know trades that I know are extremely risky, like that Palantir trade you were just in.
Yeah. Yeah.
And I was basically telling you to get out. I was kind of speaking from experience. I know how that thing's going to play out. You're going to be up $500 on it, and then
Yep.
later this afternoon, you're going to be down money on that position.
Well,
Like
see, that's
I know it. It's like
bro,
take the profit now. So,
yeah, man, like on X the other day, somebody posted screenshots from their phone. And dude, they were up thousands of dollars. And they
mhm.
hadn't sold yet, but they were up thousands of dollars on these calls that they took yesterday.
Yep.
And I was just like, "Why you're up $5,000? Why are you showing this? Take it,
Yeah. And
Don't
be careful. It is very seductive to, long options have unlimited profit potential. And it's very easy to get seduced by those things and think, man, I could make a bajillion dollars just getting some long calls or long puts on something and hitting the jackpot. But those are such long shot plays. The people that are making, those gigantic figures that are posting on Wall Street bets, a lot of those
Yeah.
people were putting a very large percentage of their net lick account value in a play,
And hoping it paid off.
on a play that probably had a 5% chance of winning,
Yeah.
and they got lucky.
Oh, the UNH, yes, last week, dude. I
Mm-hmm.
seen people. One guy made like $80,000 off of it. But and from the books that I've read about the psychology of money and stock market, and I don't know if you've ever fell into this in your younger in your earlier trading years when you were young at it, new at it,
Mm-hmm.
but you start judging yourself compared to what they've done. and you're like,
Mm,
man,
not
they
really.
made 80,000. What I'm saying
Yeah.
is like, you're like, dang, man, they made 80,000. Why didn't I think about you? And you know what I mean?
uh,
Like, you feel
yeah.
like you missed out on it.
Well,
But
well,
then
well, fear of missing out is a common thing as far as
FOMO.
mentally, yeah, FOMO. But I've never seen like some of the idiots that are posting on Wall Street bets and thought, man, if only I could do that. Because I've always understood what they were doing was stupid.
Yeah.
Like just because you know I could take $100,000 trading account and bet the whole thing on one play, and even if I get lucky and turn that into $1 million on this by buying these crazy like 5 delta out of the money calls in Tesla or whatever, even if I were able to hit that, that was such a dumb play. I would not be able to respect myself for taking such an idiotic play, even if I made money on it. I know, damn, I should have lost the whole thing, right?
Yeah. Yeah. You're essentially, you're really not a mechanical trader. You just got lucky.
No, no, and the people, and here's another thing: if you start doing all these crazy long shot out of the money, long calls, long puts, you're going to give it all back if you keep at it.
Yeah.
There is a famous example, the most famous example, one of the Wall Street bets crowd. A guy was doing these long options, out of the money long options plays, really low probability trades, and he hit several in a row. And he turned like, I don't know, like $100,000, some reasonable trading account, $50,000, $100,000 trading account. He turned it into, I can't remember. I want to say it was some insane amount of money, like $100 million, and he lost it all
Oh, I don't doubt it.
because he hit several long shot plays and he kept betting the whole thing, betting the whole
Yeah.
thing. You can't keep risking. When I say like I don't want to risk more than 2 or 3% of my account on any one trade, it's because I can't blow up my account doing that. But these people, in order to make insane amounts of money, they have to risk like half their account value, or even some cases 100% of their account value on a single trade, and that is
Yeah.
so incredibly dumb, right?
Yeah.
Yeah.